I'd like to get sort of Dom's initial reaction first about what he heard and what he was thinking, and then we might move on to the other guests.
Yeah, I mean, for me, I'm a customer of Silicon Valley Bank. So I was expecting, having heard things on Twitter and, I'm in WhatsApp groups and Slack groups and all that sort of stuff. So having heard that something was happening, I tried to log in and I got a warning message and I couldn't do anything. I thought that was pretty crap because you would think with a bank, you should be able to log in and you should be able to see your balance, even if you can't move the money, So I was a little bit surprised. And that's when I realized that something pretty serious was happening. And there was a lot of chatter in those groups, the industry groups, and amongst startups and startup founders that there was a run on the bank and that a lot of withdrawals were being made. And in fact, I think it's worth saying that Silicon Valley Bank is in the top 20 banks. I think they're number 16 in the US, or they were. And within 24 hours, we went from hearing that there was something wrong to $42 billion being withdrawn, which is about a quarter of their entire deposits. So I reckon any bank in the world would struggle if a quarter of their deposits were withdrawn within 24 hours, regardless of all the other stuff that we might talk about. So for me, as a customer, I wasn't able to access my money, and I thought that was a bit odd. And then, I guess the contagion or the conversation sort of spread from there. And then we heard a lot of other people piping up and a lot of podcasts and a lot of Twitters and a lot of Facebooks and all sorts of things about what was going on. It was kind of interesting also on the ground to hear from founders who, had payroll or, had to pay their rent or their lease or whatever it was, and were literally operating their business out of their Silicon Valley bank account and then weren't able to do that. And we've got a lot of portfolio companies in the US as well as in Australia, and the Australians were less impacted, but certainly those that are based in the Valley were severely impacted. And there was uncertainty whether or not people would lose their money or whether they would get access to their money. And I think that was causing the stress over the weekend.
And Marisa, I must actually have to preface that you're not on Australian time. You're actually on the ground on the face there in the US. So I'd go to you next in regards to what you were thinking late last week, your time, when we started to see a big material share price movement in a bank, and then obviously the subsequent quote unquote run on the bank, and what you were thinking.
Yeah, it's interesting. I've been a long-term, since 2017 SVB customer as well, so and partner over the years. So they've been tremendous to work with. But it was Thursday our time, and I was just actually coming back from the Montgomery Summit in LA. So I wasn't on. I have these WhatsApp channels with US VCs, etc., and I wasn't monitoring that because I was in transit from LA back home. Then jumped on a call with our portfolio companies, just talking about actually expanding to the US, and had a US expert there. And she just happened to say, have you seen what's happening with Silicon Valley Bank? And I went, no. Immediately jumped off the call. Like you, Dom, logged into my SVB bank account. And part of me at that point as well is I'm going, okay, I have a fiduciary responsibility as a fund manager to make sure that the dollars that we have are taken care of and protected. So my immediate instinct was transfer the money out, and then let's see what happens later. So I did that. Then circle back with all of our portfolio companies and assess the situation. The great thing is we didn't have any exposure with our portfolio companies. And then for us, it's interesting, I'd actually wired out the money, or what I thought I had, and before the cutoff time, which is 3 p.m. Pacific. However, it got caught overnight. So obviously there must have, they had all those transactions that got stopped. And then as soon as the FDIC came in the next day, they just unwound those transactions. So my money actually ended up then still now it's back in Silicon Valley Bank. It didn't actually end up leaving.
I've got two questions there, Marisa. One is, why did you withdraw? Your rationale, and secondly, the bank that you chose to withdraw it to. Did you just sort of pick that at random, or you had a backup?
See, that's the thing. We didn't actually, so there's a couple of things there. So from a fund perspective, we only do capital calls when we're funding a transaction. for our quarterly management fees. So part of the risk management strategy already is making sure that we're not holding too much capital. So the good thing is that we were actually sitting there with under the 250K limit within our bank account. Now that limit doesn't matter, but still at that point of time, I knew, okay, we're sitting under that limit. However, you still don't want to lose that cash, right? And that's what we could see what was happening, on social media. So the part of the thing is just to move it. Now, I already had another sort of, account set up that I could, transfer it out to, but that was stopped in the process.
Okay, and James and Jax, it all sort of happened Friday-ish weekend our time. Initial reaction, scrolling through Twitter, seeing what you're thinking, and seeing what you're seeing on Twitter, then you're thinking, and then communicating that with your portfolio companies and your train of thought, I suppose. Let's start on Friday, Saturday, your time, our time.
Well, it's been a chaotic weekend, that's for sure. I think I first clued into this. I got a message on my Slack from John Henderson, one of the partners here, who he wakes up early on a Friday at the crack of dawn and goes for a swim in the ocean, and so he was probably first to checked his Twitter and pinged me. I was in a bit of a tough spot. I'd been in hospital overnight with my 2-year-old who had all sorts of breathing problems, and so I was still in the emergency department on zero sleep when all this started kicking off on my Slack group. So I was largely sort of unavailable, having to look after my daughter, and so the team at Airtree really did sort of rally very quickly around this. Jax has done a terrific job sort of charting the ups and downs over the weekend. It's probably worth sort of doing a bit of a day by day, because it changed very, very quickly over that weekend, the situation we were facing and what we were doing at the time.
Yeah, so we woke up Friday morning to the news that SVB had tried to do a capital raise that looked like that had failed, and that several prominent VC funds in the US were recommending people pull deposits. Then we had to decide what to do. So the first thing was figure out who in the portfolio have accounts with SVB. So I think probably by about 10 a.m., everyone had been in contact with all of the founders in the portfolio, trying to figure out if they had exposure, and if so, how much exposure there was. And then we had to decide what we were going to advise. And that's a really difficult thing, because SVB is a well-respected partner of the ecosystem, has been a good partner for years. And also, cash is like the most important thing for a startup, and without cash, you don't survive. And so where we got to was we were recommending pulling out, having 3 to 6 months of runway in another bank at a minimum, as a way of kind of making sure that startups could survive while also not trying to create a full run on the bank. So that was our kind of perspective throughout the day on Friday, and it was really information gathering and having conversations with founders. On Saturday morning, when we saw that the bank had collapsed, we were a lot more rigorous around that information capture. We had to not only find out exactly who was exposed, but how much they were exposed, what that meant for their cash runway, for those that were in a difficult position from a runway perspective, what fund of Airtree's has invested out of them, how much cash was in the bank account for that fund, to see whether or not we could provide emergency working capital to a startup if they needed it, and then figuring out how to kind of message both to our investors, our LPs, and also to our founders, like what the facts were, and what next step should be from here.
And I think as an Aussie VC with a portfolio of companies founded by Aussie and Kiwi founders, we're probably in a better spot than a lot of US-based VCs, in that a lot of our companies have most of their team locally onshore, and so for the most part hold a lot of their cash reserves locally in AUD, because that's where they're paying their payroll, or a large chunk of their payroll. And so most of them, I'd say, outside of sort of 4 or 5, and we pulled this spreadsheet together and had a red, orange, green traffic light system, those with no exposure, those with some indirect or not imminent exposure, and then the ones that had 90% of their cash held up in SVB. And there's probably 4 or 5 in that top bucket that had imminent risks in them. And I'd say they're the ones we probably spent most of the time over the weekend doing. And there was a very, very sort of human element to all of this, right? This is probably one of the most stressful times that a founder can go through. The idea that through no fault of their own whatsoever, they might be in a situation where their deposits that they thought were perfectly safe were either evaporated or certainly tied up for a long period of time, and meant that they weren't going to be able to access that cash to pay payroll this week.
Having said that, I'd say that the kind of people dealt with it in an incredibly calm and measured way. I think we were positively surprised by how little panic there was. It really was, okay, like, this is the situation, this is what's happened, here's how we're planning to deal with it, here are the options we have available, we'll run through all of them. It was kind of a very strong moment of seeing someone in peak crisis and feeling a lot of trust in how.
And Jax, that's interesting that you say that, because then in the US VC channels over here, people were panicking.
Yeah, I was going to say that too.
There was so much fear and uncertainty, and we were seeing people were setting up bank accounts, moving money everywhere. There was just sheer panic here.
Maybe just for context, like Silicon Valley Bank banked about half of the tech companies in the Valley, right? So yes. At least that's what's reported. I think it was 47% or something like that. So I say that because our family office is invested in a bunch of local VCs and a bunch of companies directly, but also a bunch of international ones. And the ones in the UK and the ones in the US absolutely panicked a lot more than the ones in Australia. And I'll just say a little compliment, Marisa, your updates were actually the most timely and the most, I would say, calm of all the updates that we got from anyone. So I was actually talking to Judy about that yesterday, saying that it's really great because you were keeping everyone up to date. Some of the funny quirks were that because I'm a bit of a night owl, so I was actually up late on Friday morning about 4 a.m. And so I was sort of awake when this stuff sort of started happening, and the panic in the US was out of control. And I actually and Judy as well, we spent most of our time, so Judy runs our family office, Judy and I spent most of our time actually counseling founders and saying to people, the FDIC protects your funds. Do you have more than 250,000? Just relax, stay calm. Never in banking history in the US have retail depositors lost their money since the FDIC was set up in 1933. And so we were saying that to people because what is the panic for? Do you have more than 250? If you have more than 250, again, never has anyone lost their deposit. So you might not get the money straight away, and it might impact your business and your cash flow and your payroll and all those things, but you will eventually get that money. So we actually sort of informally ended up becoming almost like counselors to people, saying, what can we do to help? How can we maybe provide capital, or how can we help you set up a bank account, or what is it that we can do to help you to stop the panic? Whereas in Australia, most of our portfolio companies were not affected at all, and most of the venture capital firms that we've invested in were only impacted in a small way. So definitely on the ground in the US, there was a whole lot of panic. But I agree with what you're saying, Jax. Like, mostly the way that the founders dealt with it, particularly once the FDIC took over, was more calm and collected than I would have expected. And certainly I didn't feel what was happening in the US because I wasn't there.
Yeah, well, for exact reasons. So for the Australian VCs, if we had 4 of our companies that had 80-90% of their funds in SVB, that's out of a portfolio of 90. So we were very lucky in that respect. But even still, those 4 companies, great founders are used to having things thrown at them out of their blue and dealing with it and rolling with the punches. This, I think, was particularly stressful in that, I spoke to founders over the weekend who had, were fielding calls from their senior execs in tears on the phone, worrying about their mortgages because they literally didn't have cash available to pay payroll this week. And so for those For us, it was a case of making sure that we had the funding available to do an emergency bridge to get to those founders to make sure that they could pay payroll, just so that they could tell their senior execs that they were going to be able to make their mortgage payments this week. So there was so all credit to the ones that were able to field those conversations and keep a level head, because they all did. But it was, there's no question that this is a stressful set of situations for them.
And Chris, I just wanted to say one more thing, is that before I'll let you take it back over, but this was the largest bank failure. So obviously it's failed now, and FDIC have taken over, and there's a bit more clarity, which we can talk about, how it transpired. But it's the largest bank failure since the GFC, but it's also the second largest bank failure in history. And that sounds pretty bad, but the third largest bank failure in history happened just 3 weeks ago. So it's not just the Silicon Valley Bank that was perhaps causing that panic. It's there's been at least 3 banks that have reported issues because when the FDIC and the Federal Reserve and the Treasury Department, came out with their joint statement to explain what was going to happen, they also said, well, Signature Bank is also is going down. So there's been 3 reasonably large bank failures in the last 3 weeks. It's not just contained to Silicon Valley Bank. And a lot of the chatter I'm seeing this morning, now that people know their money will be made whole, a lot of the chatter is which bank should we move it to? And should we move it to many banks so that we're below the threshold? And some banks have even come out and increased the threshold, have said that they're going to increase the insurance threshold from 250 to 2 million, for example. So just adding that context that it's bigger than just, the reason why I wanted to get together, this is a moment in history that is not only stressful and impactful for us right now, but it's literally the second and third biggest failure in banking history in the US. So it's a moment in time where the shit is hitting the fan, and all of our portfolio companies and founders and all the employees of those companies are freaking out, and justly so,
And Chris, can I just touch on the psyche here in America and why I think people just got to that panic station? So if we think over the last 12 months, really since February, we've been working with our portfolio companies saying, look, there's a downturn coming. We don't know how deep and how long it's going to be. We don't know if we're going to go into recession. Let's shore up your balance sheet, all of that standard stuff. Let's focus on revenue, do bridge rounds where you can. That's been the rhetoric here in the US. And then you've also had, there's been such a sharp change in how VCs are investing now. It was that, last 10 years, growth at all costs, doesn't matter about your monetization strategy, we'll figure that out later, just focus on getting like freemium customers on the platform. Now you're only going to be funded if you're great. You've got to have a good business model fundamentals. You've got to have solid financials. It's taking much longer to do deals where it was, days, weeks before. Now it's months. So there's this underneath the surface, this real sort of nervousness within the industry already that's been bubbling along for the last 12 months. You had a little bright spot with ChatGPT and the whole AI piece, which has then sort of distracted people, and in a positive way. I think it's absolutely transformative for the industry. It's another one of those sort of big moments in the tech industry. But that was a positive little sort of distraction. Underlying, there was still a lot of fear and uncertainty. So as soon as this, and I'm sure we'll talk about the badly worded sort of press message and why they actually did it at that time, announced it at that time. Everyone just went into, crap, this is the big, what we've been waiting for. We're gonna, go downhill from here.
I was just going to touch on, firstly, Dom's point, but then also what the guys and girls at Airtree were saying just before in regards to the roller coaster of emotions. We're sitting here now, it's really fresh. It is a couple of days after that. But on the weekend, James and Jax, I'd just like to try and see if we can capture the sort of the feelings that you've had and how you're feeling now with so many questions still to be answered. To Dom's point about which banks are safe now, and you've seen the Bitcoin share price up 15%, and Aussie banks today on the share market are getting touched up again 2 or 3% as of Friday, and that's billions of dollars of market cap depleted on the back of SVP, not just directly correlated. We're now talking, the contagion effect. But on the weekend, in terms of the exact feelings that you're feeling and how you're feeling now.
Well, I think for us it was very inward looking. We were having to communicate often and quickly with all of our stakeholders, so our team, our LPs, and our founders. And most important were our founders, because they were in the thick of all of it. So we were very much in sort of information sharing and pooling of resources and tactics and techniques and understandings of what the founders were going through. So all of our WhatsApp channels were firing very, very quickly, as you can imagine. Lots of phone calls over the weekend. I came out, I spent another night in hospital on the Friday night, and then came out. My 7-year-old had his, now 8-year-old had his birthday. And so we had 10 8-year-olds running around a video game parlor while I was on not much sleep and firing off WhatsApp messages and emails. A particularly intense couple of hours on Saturday afternoon. But I think there was always a sense that from founders at least, that this was a crisis outside of their own making. A lot of founders are very used to the feeling of cocking things up themselves and making mistakes. And I think this was certainly something that was well and truly outside of their dealing. So most of them went into the mode of just dealing with it. And I'm incredibly impressed at the ability of the founders that we work so closely with just to get on with things and go into fix-it mode. They heard the news, they took it on the chin, and then they just went into a mode which is shoring up cash, understanding their day-by-day cash flow needs, understanding where their other options were, talking to us about bringing on emergency debt financing. All of this stuff happened very quickly. We had our lawyers were drafting up term sheets to do capital injections first thing Monday morning for the companies that needed to make payroll. All of this stuff was happening in the background, and people were just getting on with it. So I think there was a sense of don't wait for chaos to hit you. Do everything you can in your power to prepare yourself so that you're in a best position, no matter what the outcome on Monday or Tuesday, and sort of work through those problems, which I think gave everybody a sense of at least shared goals to run through. And it was incredible to see the founders in our portfolio going out of their way, despite the world falling around themselves, to help each other. I think that was one of the greatest things about being in a small ecosystem like Australia, is that the portfolio founders really want to help each other. They want to help each other sort of pull through, and are very happy to share what's going on in their own businesses for the help of people who are earlier stage or more heavily affected.
I was very impressed with the government and regulators as well. I mean, I think not only did they swoop in quickly, manage the situation well, communicate actively, and then obviously provide a solution that was elegant and kind of worked for everybody. I think, there's a lot of government bashing out there, and people love to bash regulators and talk about bureaucracy, but in a moment of crisis, I think they were extremely effective.
Yeah. I agree.
And on a weekend too, right? Like,
Dom, you mentioned the sort of the world going to shit, and I think there's clearly elements of that, but I think it's also important for us to be a voice of calm and voice of reason when the immediate panic of the last 72 hours has eased, and it's eased because, frankly, of a masterclass in good regulators, both in terms of swift and agile action and messaging. You read the joint statement that came out from the FDIC and the Treasury on Sunday night, US time, just before the Oscars. It was very clear and it hit all the points. I've got it in front of me. It says here, depositors will have access to all of their money starting Monday, March 13. Great, very clear signal. No losses associated with the resolution of Silicon Valley Bank will be borne by the taxpayer. Again, incredibly important, especially to avoid the politicalization of what could otherwise have become a really partisan issue here. They went straight to the heart of things and made it very clear that this wasn't a bailout of Silicon Valley Bank. And then most important, shareholders and certain unsecured debt holders will not be protected. Senior management has also been removed. They made it very clear that this wasn't a 2008 style bailout of the banks. This was SVB equity holders going to zero. This was senior management all being made redundant. There was no sense that this was bailing out SVB for potentially risky behaviour. This is very clear that this was only targeted at saving deposit holders, which I think was a really important message. And they worked through that within 36 hours.
Yeah, and in the UK as well, like there was Silicon Valley subsidiary in the UK, and the UK government also issued a statement a little bit before the Fed and the FDIC, and it was also very good. And I agree with you. The funny thing is, you were talking about. I hope your daughter's okay, by the way, in hospital.
Yes, she's fine.
Like,
Thank you.
Yeah, and a birthday party. Like we had the birthday party, and we had kids going rock climbing and going to the movies and all sorts of things. So that life was actually happening around it. And it was like I was at the park with my daughter climbing up a climbing wall, and she wanted me to catch her as she was falling, and I'm WhatsApping, like it's out of control. But I just wanted to say this to your point there is that it could easily have been politicized, and there is a general distrust of not only banks but also governments, particularly in the US and in the UK. It's a little bit different in Australia. Like I feel differently here. But one of the things I wanted to say is that founders have enough stresses and enough challenges already in running a business that they don't want to be worried about whether their money's safe or not. Like there should be a general assumption that your money is in a bank and, that people say it's safe as a bank, right? Like it should be considered like that. And so what you were saying then completely resonated, James. And I felt like on the WhatsApps with all the different industry groups and on the Slacks, I actually spent quite a bit of time trying to say to people, let's remain calm. Your money's protected. It is safe. People were saying, well, we need to keep it under our mattress or put it into crypto or something else. Those things actually can create fraud. They can create theft. There's opportunities for people to be deceived. And I logged into Silicon Valley Bank this morning, and one of the warnings they provide you with is, make sure you don't get defrauded during all of this, because people will be using this event as a catalyst for bad. So I think that message is really important. If we as a community can help keep people calm and focused on those awesome actions of government and the industry and supporting each other, then we actually just create a more comfortable environment for startups to thrive and survive. And so, yeah, I'm 100% with you. And I was talking to Judy about how some people want to have a fight. Like they come in saying, oh, bloody government this, or pointing fingers at the risk management strategy at the bank, or the venture capitalists causing a run, or whatever it is. Everyone's pointing fingers, and there's lots of media articles, but actually at its essence, it's a bank that had 25% of its deposits withdrawn within 24 hours, and then panic started and people were like, I'm not going to be able to get my money. With the government stepping in, all deposits are protected and everyone will get their money. I mean, I think that's quite extraordinary.
And we can breathe aside of the relief. And I think this is why we sort of now look forward to what are the downstream implications of this. Because I think, yes, the SVB deposit holders are safe and everyone's going to make payroll this week and will continue to, which is, I think, a great thing for the entire startup ecosystem. But I think the downstream implications of how do we need to adjust regulation? How should we think about this industry, and what lessons can we take from this? I think will be picked over for many weeks and months to come, Dom. And I think the point around seeing this play out in real time on WhatsApps and Slack groups, I think, is a really fascinating one, because it's also an element of what caused some of the mass hysteria and panic. This was really the very first major bank run in the mobile age. If you go back and say the last really large one that happened before this, would have been Northern Rock and Bear Stearns in 2007, 2008. Just it coincided with the launch of the iPhone. So there hasn't really been this sort of situation in a world where everyone's glued to their mobiles. And the two impacts that has in these sort of scenarios is that, one, it's very easy to log on to SVB and try and pull your money out. So if you do start to hear rumours, then the friction involved in a bank run is much lower because everyone's got mobile banking access, and also the rumours go around much faster because everyone's plugged to their phones.
Well, here's a funny story for you, James. Sorry, I interrupt you, but Chris and I were on the phone to each other talking about this as it was happening in real time when the Fed and FDIC and Treasury statement was released. And so we immediately picked it up and just hung up on each other, and we went off And I said to Chris, sorry, I was a bit quiet because I was off emailing it to Marisa and posting it in Slack and putting it on the FinTech community website and putting it out to WhatsApp. And it was literally happening in real time. And I felt like, even though I'm in Australia, we, Chris and myself and Judy and others, were actually contributing to the calm by distributing that document as soon as it was released, because there were people that were still on Twitter and Facebook going absolutely nutty about the whole thing when the statement had already been released. And half an hour later, when people then started calming down, we were sitting back and we were already calm. So I think there was not only was it in real time and the first time it's happened in the mobile era, but I feel like it was global. Like, we're in Australia, and even though I said I wasn't on the ground in the US, I still felt like I was part of helping to resolve the issue.
And nothing has a network effect quite like panic on the one hand and trust on the other. It tends to move reasonably quickly. Panic faster.
Yeah, just on that topic, and Marisa, you're in the throw of it in real time as well during the day, and not so much on the weekend. But the impact of social media and scrolling and Twitter, and there was Bloomberg articles saying that deposit holders would get 30%, and there was a buyout that was going to happen, and there wasn't, and then deposit holders might get none, and then it might get 50%, and they might get 60%, and everyone's reading that and panicking. Is there something to say, James mentioned Northern Rock, and I was over in the UK working at the time in Northern Rock in 2007, and then through the COVID crisis, is there a particular element now, and maybe we're a bit wiser or whatnot, just to really, what Dom mentioned about, and James being that clear thinking and maybe ignoring all that noise and really kind of waiting for the official statement or waiting for something to happen and then acting upon that, as opposed to scenario testing. And I understand scenario testing is very, very important about what ifs and what can happen. But in terms of articles, news, and the democratization of information, which we talked about the mobile era, there is a lot of noise, and it can cause, I suppose, a lot of unease during the waiting period.
Yeah, exactly. And so much speculation, and you can't make decisions based on speculation either. And that's why I wasn't sort of madly running around opening bank accounts on the weekend either. I mean, at the same time, we didn't know whether there was going to be a contagion element. So whether it was going to spread to other banks. And so I'm going, there's no point in spending the time and the cycles going and trying to open other bank accounts if they may not be around come, Monday or Tuesday morning. And then was on so I plugged into the National Venture Capital Association call, some of these industry bodies that actually have relationships with the FDIC, and even they couldn't provide the answers. So it was really waiting until we had the guidance from the FDIC, because I think just to your point, Dom, about communications from Silicon Valley Bank, the only communication that I received was at 9:30 p.m. on Thursday evening. So this is already, the bank runs happen.
Yeah.
That's happened.
I didn't even get a statement. I got nothing until today. And I was quite shocked. Yeah, Judy was asking me that, and I thought maybe it's because I'm an international client. I just want to add this context. Like, the reason why I was trying to help others to be calm is that we had less than 250,000 on deposit with Silicon Valley Bank, so we knew we were covered. Then we also had more than 250,000 in an investment account on call with Silicon Valley Bank with our online broker. And so I was actually in the position where I thought I could be one of the people that lost money, and a lot of money. And so the reason why we were calm is the early statement from the FDIC said three things. It said everyone's protected up to 250. And then it said we're going to provide an advanced dividend on Monday so that people are able to do payrolls and whatever they need to do. And then the rest of it will be providing over time, to protect depositors as we sell the assets. Now, I thought that was a very clear statement as well, right? That was before the big statement that said they'll cover everything. And so I was on WhatsApp and Slack telling people, look, your first 250 is covered. They're going to do this advanced dividend. We don't know exactly what it is or how it's structured, but they've said it, and they wouldn't say it if they weren't going to do it. And then they're going to sell the assets, and you're going to get the rest of your money. So don't panic. But as it turns out, there's a massive distrust of government and banks in the US. And a lot of the people just didn't know how the FDIC works. They didn't know whether or not they could trust the statements that were coming from those bodies. And so I felt like our job was a little bit to say, well, in Australia, we're super highly regulated and we do trust the government and the regulators. And so take it from us, everything will be okay. Now, we made a decision not to make a public statement ourselves. I've just told you guys that we had in SVB, but it was a tough decision to make because you don't want to be big noting, but you do want people to sympathize and understand that we can empathize because we're in the same situation. Now, we couldn't even log in. Like, at least people in the US could go to their branch, and many people moved money out, but we couldn't even access the accounts at all. So it was actually a strange position to be in, and we had to debate amongst ourselves as to whether we would out and tell anyone that, hey, we're one of the Australian businesses that is directly affected. Because there were news articles and there were people on Twitter and people making open source lists, that sort of stuff.
Yeah, I'm just interested on that point, James, with your portfolio companies. There was journalists hunting for people that were customers, and there was lots of social media about, if you're a customer, can you talk to us in the press? What was the thinking there from your portfolio companies?
Yeah, we started getting inbound from the press probably later than I expected, actually. I think we started getting the first ones around lunchtime on Friday, so you sort of wonder what they were doing for the first 4 hours of the day. But maybe they're having a lie-in. But there wasn't, as you can imagine, wasn't our priority. Our priority was on the portfolio. I do think, yeah, that's right. They're looking for interesting stories, and I think by and large the Australian press were pretty good. They weren't reactionary or in a panic mode. And we were happy to sort of share our views and also try and lend a voice of calm to the ecosystem. The last thing we wanted to do was be driving a bank run on one of the most valuable institutions that our ecosystem has. And our advice, as I think was reported, was to make sure that you've got some cash diversity. Most companies in Australia have cash runway outside of the US to cover at least 3 to 6 months. I think, as it turns out, I think that was probably overly cautious, frankly. But I think it's always good advice to have some diversity in your cash reserves, and so that was the advice we reiterated. But we weren't out there advising everyone to pull it out. Now, I can understand our founders who are in that situation and have the absolutely asymmetric downside risk of losing money. That's a rational reaction, and I was supportive of those who wanted to move money as quickly as they could. But the reality was, over the weekend here, as you said, Dom, there wasn't a lot you could do. There was a cutoff that was about 9 a.m., 10 a.m. our time, where wires out of SVB just weren't being actioned. And so a lot of them spent the weekend just trying to plan for downside scenarios if the FDIC weren't able to come to the party. And so that's what they did, and they did it in a calm and collected way. I think the press were playing catch up in this more than most, because frankly things were moving so quickly that every story they had a shelf life of about half an hour. And so I don't envy them having to sort of run this through as well, because their publishing deadlines certainly are longer than what they're able to gather from what was happening on the ground in the market.
And I can't stress enough how important SVB was as a bank. Yes. Like, none of the American banks would actually bank us as an Australian company trying to set up an account in San Francisco. We could not get an account set up with any other bank, and they have a presence on the ground in Australia, and they come out and meet with our startups, and they actually supported our businesses in the US with equity loans, with long-term debt options, with investment. They had an investment arm, as well as bank accounts. So I just want to echo what James was saying, is that SVB, and I think Jack said it earlier as well, were actually an awesome institution for the startup industry. And there's not many others like them. And I do worry that there still hasn't been, at least before we started this chat, there wasn't any announcement of an acquirer. And I worry that if SVB disappears, then what happens? And it's probably not me that's the only one that's worried, because I heard this morning that the regional bank shares, and it's been published now, but the regional bank shares in the US dropped between 50 and 80% And they've already been naming. Like, you can go to Wikipedia now and you can see First Republic Bank, Western Alliance Bank, and Pacific West Bank have all been had their shares halt trading because they're dropped so badly. So there is going to be some contagion. And the thing that worries me is, where were we going to bank now? I asked Judy if she can investigate where do we send our money. And we have to go through the process as a foreign national of setting up a new enterprise bank account. It's going to be a nightmare.
I couldn't agree more. I mean, it's SVB have been a tremendous, like, from a customer point of view and from a partner, because they've they first supported Elevarco back in 2017. So this is even before I established the fund. So tremendous, and also, I mean, helping those Aussie founders that if you don't quite have boots on the ground in the US. If you have a Delaware entity and an EIN, you could establish a bank account without having to physically be there. Whereas a lot of US banks, if you're domiciled outside of the US, like physically domiciled, you can't open a US bank account. Or if you can, you have to go there and be there in person to validate your ID to do it. So there's just, I mean, that's just one of the things. There are so many things that they've done, like, fee free for the first couple of years for startups, connecting our founders with the ecosystem as well, which is, I've never seen a bank do that, and so actively they'll connect to founders with investors and other vendors. Really, they're so focused on helping the founders be successful that's just I really hope that they stay alive.
I mean, none of that sells newspapers, and it doesn't make good tweets. And that's what frustrates me, is that people are focusing more on pointing the fingers at the risk management or the balance sheet of the bank and all these other things, which they're all problems. And the regulators and the management and risk people at SVB and the venture capitalists and the startup people that all took out their money, in such a flurry, all of those are contributors to the problem. They're all issues. But to me, they're not the main story. The main story is that Silicon Valley Bank for 40 years provided a service to half of the technology sector, including international companies, to set up in the US. And to me, that's quite extraordinary. I mean, they introduced us to our lawyers in the US. They introduced us to our accountants. They came out to Australia and met with us. And they offer money market products that other banks weren't offering. So I actually think that that's the real story here, is that we're going to lose one of the great institutions that have actually supported and helped build the Silicon Valley sort of hype over the last 40 years. And that's a real shame. And I don't exactly know who's going to take over that responsibility.
Yeah, I was just on that point is two things. One, that we've gone through a wild 72 hours. What are you feeling now in regards to what you've learned in the last 72 hours and maybe potentially remorse, as you mentioned, Dom, about what just happened, and the opportunity then moving forward for either A, someone to come in and be that trusted bank again, or B, if not, then what do you think you're thinking about the banking system per se, as well as what founders might be thinking about their deposits?
For me, at least, I think there's going to be a ton of downstream impacts, and I think over the next days and weeks, we're going to see really if there's a lot to be worried about in the US banking system, in particular around other small regional banks. And there's obviously part of the FDIC's rationale in coming out and moving quickly and assertively in regards to Silicon Valley Bank was to try and stem any concerns around bank runs elsewhere. And I'm hopeful that it will have had enough of an impact, but we'll see in the coming days. I think there's other non-banking downstream impacts though. I mean, there's no question this is a blow for tech. It's a blow in the sense that SVB was a core linchpin for all the reasons Dom talks about, and without a genuine buyer pulling the team together, that's going to be a real gap in the market for value-added services for mostly tech companies, but also VCs. But I think there's a bigger reputational impact on the tech markets in general. I think we've the confidence in growth in any growth assets, frankly, but certainly tech, has been dented over the last 18 months with the public markets dropping in the way that they have. And so this was another data point that broader mainstream investors look at, and they think, what's going on in this world, and how investable is this asset class in reality? So I think there's a coming to terms with having to grow up a little bit in the tech ecosystem more generally, and for all the discussions Marisa was having at the top of this conversation about having to be much more cognizant of the fundamentals driving the business, rather than purely the growth and the cheap cost of capital that drove so much of the excesses in the tech market for the last 12 years or so. There's a generation of investors, a generation of founders who have only ever known up into the right environments in technology. And so I think this is just another example of coming to terms with the new reality in which we live.
I want to be an optimist here. So I feel like this was a traumatic situation for everybody. It demonstrated that, many of the founders who we work with are calm in a crisis, and we put our trust and our capital with them, and they are very good to work with and sensible and smart, which has been a huge positive. I think this is a short-term idiosyncratic issue. Longer term, tech is now the third largest contributor to the Australian economy, creating thousands and thousands of jobs. The smartest people in the country are leaving university and they want to go and work at Canva, not Goldman Sachs. You're getting kind of the second generation, third generations of founders coming through who are starting new businesses, hiring more people. I think short term, yes, the last 18 months has been stressful, with the last weekend incredibly stressful, but longer term, it's still incredibly optimistic about tech in general. And I think it's easy to get lost sometimes in these kind of short-term gyrations, and just want to draw kind of attention back to the fact that we are lucky to be in a growing sector of the economy with lots of opportunity, and with the opportunity to bring Australia onto the world stage.
I think that's right, and I think these are the narratives that are important, and I think this is the challenge that we have, is having some of these narratives getting overshadowed by recent events, when in reality these are decades-long shifts in the economy and technology, and being underwritten by some of the most talented, ambitious, and frankly diverse founders anywhere in the world. And if we don't tell these stories, and Jax, you're right, absolutely right to be an optimist, because if we don't tell these stories, the stories will be told for us by people who have an axe to grind, and some of those axe to grinds will be people who have an agenda against technology and innovation, frankly. And I live in fear of a world where, and I don't think it'll happen, but I live in fear of a world where startups become a dirty word in the same way that innovation does. It's on us to tell all the great stories about the genuinely positive contributions that Australia, New Zealand, and founders all over the world are having in that contribution from the technology industry.
Yeah, 100%. It actually makes me feel old. I'm still young, but it makes me feel old because I remember the pyramid collapse. I remember even in the 80s when I was a kid and we had catastrophic market failures. I remember the GFC. I lived through all that, and here I am today, and I would say, a reasonably successful founder and having plenty more cracks at it and trying to support the community and the industry as best I can. And so I actually try to look forward 20 or 30 years and think about those young founders now that are just starting out in the industry, that have only seen low interest rates and like you said, charts going from the from the bottom left to the top right, and then also having low cost of capital and easy access to capital and all that sort of stuff. But I actually think there is a cohort of these young next generational founders that will learn something from what happened today, and will be more resilient than ever, and continue the innovation and creativity and disruption that Aussie and New Zealand founders have been able to do for decades. It's not something, it's not overnight.
I'll leave you a note of optimism there, specifically around the ANZ market. I know this is primarily your audience, Chris, but there is a reason why Australian large breakout companies are well positioned in a market like this, and it's because historically the Australian breakthrough companies have been more capital efficient than their cohorts overseas. Australia is the most capital efficient producer of unicorns and decacorns anywhere in the world. It's not even close. We produce about 2.1 unicorns per $1 billion of capital invested into the venture ecosystem. And the next closest is Israel and Singapore at about 1.5. and everything is well below that. And I think there's a good driver of that. That there's fundamental reasons why some of the breakout companies that have come out of Australia have been more capital efficient and have fundamentals that make their valuations stack up more than what we sometimes see overseas. Frankly, there's been a lack of capital here. We certainly need a lot more capital to support the companies coming through, but it's also been part of the DNA for Aussie companies. It goes right back to the first generation of companies like Atlassian. There's a model of companies coming out of Australia that has done more with less, and they've been able to do that by building here in Australia and selling to the world. And that has driven a level of capital efficiency in the DNA of most breakout startups in Australia, which I think lots of the parts of the rest of the world would absolutely kill for.
Yeah. 100%. So I've got two thoughts. One on the positive side, taking sort of Jack's sort of lead there, and then one on the sort of the more concerned side. Could not agree more. This year, I think, is one of the most exciting years in tech. I mean, I've been in tech since '97, so I've seen a lot of the up and down cycles, and I have to say, probably over the last 3 years, learnt a lot more, and have a lot more playbooks on how to handle different crises, because we've had a few. But definitely, I mean, we have so you have. Generative AI that is obviously so transformational, but you also have, just to that point around the Aussie founders, we have 4 of our Aussie founders expanding to the US this year. And what I love about the Aussie founders is that real focus on business model fundamentals and really driving revenues, and just the sheer sort of tenacity and never give up, despite issues, situations that come up. I think that's just ingrained in the Aussie culture, and then I see that in our founders. And some of them had really tough year last year. A lot of our portfolio companies did, but they've survived that, and now they're looking towards the future. So very bullish on this year from a technology perspective, but then also seeing those Aussie founders, expand into the US and having success. What I am sort of, concerned about is the unintended consequences of what's happening with the Fed bailing out Silicon Valley Bank and Signature Bank, and potentially other banks. We've already talked about First Republic being one of them.
Marisa, I think we've got to be really careful there. I think this will come up in the next few weeks around this concept of what is and what isn't a bailout. I think we do really need to draw a distinction between what happened at SVB and what happened at 2008.
That is a good point. That is a good point. Yeah. But the other thing is, what I think sort of actually going through over the weekend was the actual impact. So not just on the immediate companies that were worried about actually making payroll, it was then the companies that they serviced and they worked with. So I heard of companies here in Australia that didn't have any exposure to the SVB bank accounts, but they did have exposure to companies that did, and they traded with them. So that's sort of some of the flow-on effects here. Even if you're not directly impacted, it's your customers, your suppliers, and how that, and then all of a sudden, if you can't get access to that particular type of technology that you use to help transact with your customers, where does that leave you? So that's still something I think to monitor over the next couple of weeks around what are some of those unintended consequences.
I think that's actually one of our traits, Australia and New Zealand. We're able to be optimistic and positive and cash flow positive and focused on those ratios, and at the same time manage risk. Be aware of and concerned about. I just got back. I'll say the last thing. I just got back from New Zealand and did a presentation there at the FinTech New Zealand conference, and it was electric. The optimism for the future and the innovation that's happening down in New Zealand is quite extraordinary. And it's a shame that we haven't, we talk about a lack of capital in Australia. There's even more of a lack of capital. And we have obviously Airtree and Blackbird and a few others in New Zealand, but really a lack of capital there and an enormous amount of innovation, even beyond tech. I mean, they're the first in the world to have the women to vote, for example, so they're and the whole conference, it wasn't, I was looking up online, how do I do a welcome to country in New Zealand for the Maori? And you don't, because the whole conference is Maori. they say it in Maori. There was an address. They have a Maori person coming up. Everybody gets up and does chants and everything. And so those economies, Australia and New Zealand, are so far advanced culturally as well as in technology and startup. I think the future is actually very bright.
Yeah, on that note, I think we might leave it there. Thank you, everyone, for giving the insights into the last 72, 96 hours of what has been a roller coaster and a moment in time, which we will look back at, which we've just captured a portion of feelings through that, the portion of what the feelings were before, during, after, and the lessons to be learnt, which will probably pan out in the next week, month, year, or decade or so. Really appreciate all your thoughts. Really appreciate all your thoughts, and we look forward to all catching up in real life very, very shortly.
Thanks, guys.
Thanks everyone.
Guys. See ya. Bye.